Last trading session of the week. Well, for the Sensex and the Nifty, it's been a gap down opening today. That's following the kind of weakness that we've seen across the globe. The global cues have been weak, beat Wall Street that ended lower. Apart from that, the Asian markets also were mostly trading lower in the early session, giving way to a lower opening for the Indian markets as well. And just how we always see when the US markets, the mother market, do see a fall, especially the NASDAQ, which actually slipped quite a bit in the overnight trading session. It does take down most of the global equities with itself as well. And that's exactly what we are seeing right now. In fact, the Sensex opened with about a 400 point of a sharp cut in the opening trade. And we are seeing both the Sensex and the Nifty trading near their crucial support levels now as well. Now at 9:16, we did see the Sensex opening at about 392 points lower, or 0.6% fall, with a 0.6% cut at 60,843, and the Nifty was down 114 odd points, or again 0.6% of a fall right there, with an 18,143 kind of a level. Remember, 18,150 was breached right at the opening level. Of course, we've come back some points right from that level, but we are still seeing a broad-based sell-off in the opening session today. Now, if you see, over about 909 shares are just about advancing right now. Over 1,150 shares have declined at the opening session, and 89 shares are actually unchanged. Now, when we talk about the top gainers and the losers at this point in time, when the Nifty 50 is concerned, you do see a whole lot of big wigs, some of those who have been in the news flow, and some of those who are in action because of the earnings as well. Now, HDFC, HCL Technologies, Asian Paints, Wipro, and UPL, all of them are the major losers on the Nifty, while on the other side we do see Cipla, IOC, L&T, Titan, and Divis Laboratories showing the top gains as far as the Nifty 50 is concerned at the moment. Of course, also pulling down the investor sentiment is the constant sell-off by the FIIs from the last three trading sessions. We have seen yet again FIIs pull out money from the Indian stock markets. About 1390 odd crore rupees of a sell-off is what we've seen from their portfolio. Again, domestic institutional investors, however, were seen offsetting those losses. 1065 crore rupees of a purchase seen in the shares of Indian markets by the DIIs. However, when we talk about the other broader market space today, you will be able to see that small caps are seen bucking the trend at the moment, up about 0.5% in trade. The mid caps are absolutely flat. The Nifty Bank is definitely down in line with the benchmark indices and seeing a cut of 0.6 odd percent. Apart from that, if you see, some of the bright spots only remain in autos, or slight gains coming in metals, but apart from that, pharma, IT, realty, and banks are dragging the street in the early action. A whole lot of focus on the stocks on behalf of the earnings. Talk about Mytree, that came out with its earnings yesterday. The company reported a profit of 437 odd crores in the December quarter, as against 398 crore rupees in September quarter. Now, the revenue has also jumped to 2750 odd crore rupees from 2786 odd crore rupees on a Q-on-Q basis. Now, we have seen a whole lot of brokerage houses come out with their reports right after the earnings, like Motilal Oswal on Mytree believes that the management's increased focus on the energy revenue and the strategic accounts is actually reflected in its revenue and the client mix in the results of Q3. However, they do say a strong outlook on strategic accounts, decent deal signings, and the ability to sustain and improve margin are the key positives that they are looking at. As the key positives, however, they do believe are already priced in. There is a limited upside that they see on the stock. The target price that they have kept for the stock is 4880 per share, implying a 35 times FY24E on an earnings per share basis. They have maintained a neutral rating. However, some of the other brokerage houses do have a more bullish stance as well on Mytree, despite the kind of valuation premium that it commands. Over 5,000 rupees of targets are also being seen. It'll be interesting to see how throughout the trading session M&M really performs, Mytree really performs today. Now, some of the other stocks that are in news flow today include stocks like Titan, because ace investor Rakesh Jhunjhunwala has yet again increased the shareholding in the jewelry to watches to eyewear maker Titan to 5.09% at the end of the quarter of December 2021. It's one of the top gainers, which is why in today's trading session. Reliance Industries is seen pulling the markets out from the lowest point of the day at the opening level right now, single-handedly. Remember, the company has signed an MOU for investment of 5.95 lakh crore rupees in green energy and other projects in Gujarat. So Reliance Industries will also be in focus. Of course, then today it's going to be another day when we'll see a whole host of big earnings coming about, especially HCL Technologies from the IT sphere. We've already seen TCS, Infosys, Wipro, and Mytree out of the way. HCL Technologies is the next one that will be coming out with its earnings. Apart from that, tin plate company, Gujarat Hotels, Indochem, International Travel House, Onward Technologies, Refnol, Raisin, Space Incubatrix, also Swasti, Vinayaka, some of these small companies that will be coming out with their earnings also today. So keep in mind if any of these stocks are in your portfolio. But for HCL Technologies, of course, it will be coming out with its earnings after the market hours. So the markets will only react on Monday once the numbers come out. But as far as the expectations go, HCL Technologies is likely to report a year-on-year double-digit fall in the December quarter profit, despite the double-digit rise in sales. Now, analysts do expect a sharp fall in the EBITDA margins, although they said that the IT major will likely maintain its revenue constant currency as well as EBIT margin guidance for going forward from here on. So keep in mind all of these factors while you trade in the stocks today and the overall stock markets as well. There is a bit of caution that most of the experts have been warranting after a long haul of the one-way rally upward. We are seeing some bit of caution stepping in. Of course, there were concerns about being in an oversold zone, whether or not that is true, but we are seeing some bits of consolidation or a dip in today's trading session. We'll keep you updated with all that's happening in the world of business that may impact your trades and your stock markets as well. So do stay tuned with us on Business Today, and you can stay linked in with us through all our social media platforms. That's Twitter, Facebook, and Instagram. Many thanks for tuning in.